work, and how do I stop myself from like over trading now, especially for the last 2 months, where I still want to am struggling to be in profit. I mean, although I am, as you know, but I'm just trying to ensure that there's no mistake that I do going forward, like going forward. So any advice on that, bro?
Not much, man. Like you already know what you have to do, as you've said. Look, basically, what has happened with the whole new expiry regime is that a lot of previously high expectancy systems have started to show a lot of cracks. There's a lot of new market behavior. We're seeing like big IV explosions on expiry on 0 DTA. IV explosions didn't used to be much, so it was primarily dealing with gamma. But lately, we're seeing that towards in the last 1.5 hours, sometimes the straddle ATM straddle value is doubling, right? So stuff like that is not something that people have generally been accounting for. And it's also showing. See, previously when there were like fewer expiries and expiries were spread out, there wasn't so much concentration on each individual expiry. So this is the progression of congestion that's taking place. It's like everybody's trading one instrument one day and everybody's switching to the next instrument, and given the nature of that supply as well, due to systems that were working, you're seeing that it's leading to these highly operationally problematic situation. So if for whatever, I mean, there's no rocket science here. If you're having a tough time, it doesn't have to be that you're losing money, right? Like if you're stressed, you have to take a break. You can't beat a dead horse. I've spoken to a lot of people, and I can say that everyone's been having not the best time. Even if they're making money, people are feeling both the exhaustion, because previously it'd be like, okay, Tuesdays and Thursdays is like high intensity and everything else is chill. But now it's like every day is high intensity. So in a way, we are not also able to recognize the impact that's having on us in terms of our mentality, and stress bottles up, right? So you have to force breaks, and cutting size is the best. Like whenever you feel stressed, you have to cut size. Also, like in this regime, I'm finding a couple of things that are working for me. So I'll just like, what I do is, if I find things attractive, I'm trading like at the money, but with smaller size. So that gives me a better risk to reward when, let's say, the premiums are attractive, rather than selling OTM and sitting where you won't realize anything till the end of the day, and suddenly one spike it'll take you out, and then you don't have compensation. I'm preferring having smaller size, trading at the money, and whenever I feel like the opportunity, the attractive premium has come down, I then swap it out. That could either be into ratios, and to be very frank, if that works out, towards the end I'm only trading long gamma. My idea is very simple. What's happening is, due to congestion, by the end of the expiry, everyone's sitting only on like 2-3 strikes max, right? Like everyone's sitting on 2-3 strikes, and any panic, like we saw this twice with FinNifty, is leading to complete butchery of those people. So there I am actually buying, I'm straight up like buying options whenever there is a possibility. But when I say I'm buying options, people have to understand I don't risk my capital in buying options. Whatever I've made in that day, maybe a part of that I will put into it. But my, see dude, it's less about, oh, what can I do to maximize profit, and more about, am I doing good trading or not? Yesterday, when synthetic future is trading at 15 rupees premium to the spot, with like half an hour to go for averaging, spot is at 19 like now what was that, 19752 or something, and the put option is trading at 3 rupees. It doesn't make any sense. So those kind of opportunities, I'm towards the end, I'm just quitting. I don't want that last 1 hour of DK or whatever. So I'm switching to long. So everyone has to figure out what's working for them. If you're feeling stressed, just take a break, and it's not rocket science. If you're like, what do I do to stop myself from overtrading, let's be very clear. The competition pool has gone up. So once again, the same law of the market, that people who are disciplined will make money, and people who are not disciplined will lose money. So like, you have to kind of force yourself to behave appropriately. So um, Yeah, thanks, bro. But like everyone's going through a similar thing, so nobody's isolated that the systems that they had previously, be it non-directional, directional, whatever, short wall systems or long wall systems for that matter. Because even long wall systems, you might not get a move for the entire day, and suddenly you see that options have gone 10x. People think, oh, option buyers must be making great money. No, man, it doesn't work that way. When the rate of a move is so fast that like in a second it's like gone up 10x and come back down 10x, nobody can really take advantage of it. So that's the thing.
Bro, I was just thinking that, like, probably with this thing, there is a buying setup that can be created. And honestly, I tried that last month only on one day, which is 25th October. And it was a crazy day. Firstly, I wasn't able to execute, the sell. I mean, I was buying at an 1800, 1800, 1800. By the time I saw that, the MTM went crazy. I mean, I get what you're saying. I mean, I'll try and stay disciplined. Probably you can take other questions, man. I mean, you have already repeated this so many times,
Sure,
but I
sure.
still come here to get a reconfirmation.
Thank you,
Thanks,
thank you,
bro.
bro. So, so what do I mean by this? By the way, just to give you an example, let's say you have sold a 10 rupees option and you have set a market order either through your algo or through the broker to exit to take stop loss trigger at 20 and market order, right? In a spike, you'll see that let's say the spike went till some 30-40, you might get your exit at 30-40 because. Sorry, I got a call. Am I audible?
Yeah,
Yeah,
yeah.
bro, go on.
Yeah. You'll be like, Arey boss, my market order executed at the peak. Same thing, let's say your long 10 rupees option, and when it's spiking, you exit. And you'll see that your exit will be somewhere in the middle at 20. The reason for this is very simple. In those rapid moves that take place, given the infrastructure that we have, which is like, let's say you have an execution terminal that is connected to the broker through APIs, and then the broker is connected through the exchange. It's a very slow process. So we can never compete on a bid ask spread. It's like the slippage that we get, you can have positive slippage, you can have negative slippage. Like positive slippage, like it works in your favor, negative slippage works against you. But with our retail infrastructure, and everyone here is retail only, anyone who uses a broker is not a member of NSE with colocation, is retail only. We will never be able to compete on bid ask, so we'll always get negative slippage in such moves. You notice, if one guy has bought and one guy has sold, if the guy who is sold is trying to cover his position, he will get a higher price. And if some guy who's bought is trying to sell to book his profit, what is that noise? Yeah, it'll always work against you. So we can't compete. So one more thing that I'm trying to do is I'm trying to bring down the churn. Uh, there's some noise. Okay.
It's
So
Jesse, bro. Can you mute yourself, please? Thank you.
yeah. So that's also something to keep in mind. Look, one of the biggest issues that this regime is showing is the operational risks, right? So to reduce operational risks, something that I'm doing personally is pivoting from high churn into low churn, which is I don't want to constantly be making big changes on full margin. I would rather be using a smaller portion of the margin to trade higher premiums and try to approach it that way rather than trying to take large exposure on lower premium. So, yeah, perfect. I think we can go to the next question. Thank you, Himesh.